Welcome back to Reformed Millennials, the podcast where finances, economic trends, and sports intersect. Cam and Joel help listeners better invest their time and money. Also, it's important for listeners to understand that investing in equities, fixed income instruments, and/or alternative asset classes involves substantial risk of loss. Any action you may take as a result of the information presented in this podcast is your own responsibility. The information in this podcast is presented as a general educational, informational, and entertainment resource only. While Joel is registered to provide investment advice, this podcast does not provide individualized investment, tax, or insurance advice, nor is it meant as a recommendation to any listener to buy or sell any specific securities or otherwise take any other form of investment action. This is an excerpt of the full legal disclaimer that's available on the landing page of this podcast, which includes whether Cam Pitchers or Joel Shackleton have any ownership or interest in the specific securities discussed in this podcast.
Cam, I'm going to read this quick title of an article on BNN Bloomberg. Mm-hmm. Canadians split on whether to blame provinces or Fed for housing crisis. We are so good at picking or finding or arguing about the scapegoat we want.
Yeah, whose fault can it be?
It's not mine.
No.
Not yours.
No.
It's kind of like...
To be fair, you are contributing to it. You did buy and sell a home this year.
That's true.
So.
I'm causing I'm part of the problem. I had this interesting conversation before we dive into like a market update and whatever with a group of friends, and they sent me a meme that was like talking about capitalism and how it's the reason why, they will ruin the earth in the search of profits. Mm-hmm. And then I kind of like threw it back at them and was like, whose fault is it that we buy the stuff from these evil corporations? Is it the consumer that's deciding to buy this stuff? Or is it this, are we so weak that we can't even protect ourselves from these big evil corps? That their profit seeking is the reason why the world's ending. It has nothing to do with our consumption and what we want to do as people. So philosophical.
I was going to say chicken or the egg conversation.
Probably. I think it's probably the consumer's fault. They're just creating mouse traps. So is it the mouse or the trap itself? Like,
cheese is pretty good, so I don't know. If I'm a mouse, I need it.
Exactly.
What do you think we do not need to get into a philosophical conversation.
We can't get into
that. Is an interesting...
Whose fault is it? Because it's obviously the Fed's fault if you're an Albertan. Mm-hmm. However, if you're every other province, it's probably better distributed in terms of who's to blame with housing.
Well, I think to probably cut to the chase on that, at the end of the day, there has been the fault is spread amongst everyone. I mean, at the end of the day, the provincial governments blame the federal government. The federal government blames the provincial government for either not taking certain action or not getting on board with certain legislation, and just infighting, which has essentially slowed down the development of any, we've talked about inventory being the biggest issue in this country. And I mean, basically in a lot of the built up cities, even in the United States that have seen growth, they're having the same issues with inventory. And I think at the end of the day, there has not been a consensus on how to spend money on infrastructure for a very long time. I'm not going to say there's been a consistency in government that's led to that necessarily, because we have had, there could have been things done probably when conservatives were in power for all that time too, that could have led to place, but there is a logjam in relation to spending money or finding the money to spend properly on infrastructure spending when it comes to development. And that's the issue. At the end of the day, that is the issue. It's not capitalism's fault that we don't have enough houses to continue to grow our economy. We've on this podcast talked about there's birth rate concerns, which means we need to, in order to get more people into our economy and continue to grow, we need to have immigration policy that makes sense for our country. In order to do any of those growth things and to continue raising the bottom line of standard of living for the people in this country, we need to continue to grow you think flattening out and deselling is the answer to anything? No, it's not. So we've made our bed over the last 20 years. There probably could have, I'm sure we should spend a podcast series of 4 episodes in a row to talk about everything that led to where we're at now in the current conversation. Probably it's not, like, it can't be summed up in a 5-minute conversation.
The federal infrastructure and like the way in which we incentivize builders.
Yes.
All the stuff that get the red tape. Then there's the federal programs, and then there's the difference in incentives. Like we could literally talk about this forever. But I guess the reason why I wanted to talk about this out the gate was I had another conversation with another friend who's a little bit more
evil capitalist.
Well, he is, but he's an immigrant as well, like first generation Canadian, and he kind of just like speaks from the heart a little bit. And he said, and he's currently looking to buy a house, and he was just like, Joel, housing prices aren't going down. We have an immigration rate that is through the damn roof. If the people who are going to refinance in 2025, 2026, 2027, they're all just going to be displaced by the immigration of wealthy people from other countries who want to come and be in North America. And I kind of just got to thinking, I'm like, that's probably right. And sadly, I believe that people that aren't going to refinance in 2025, if rates are 5 because their mortgage rate doubles, they're going to be renting. And then they're going to fire sell their house, sure, but there's going to be 2 people there to pick up the house and buy it. So I don't know what to think. There's a lot of people on BNN and Bloomberg thinking we're going to be in a housing crisis soon in Canada, and we're going through an enormous bubble and not seen since the Japan. Or it's possible that we have 40 million people that are going to be 44 million in 2027, and 4 million people are going to come pick up those houses that people maybe can't finance, and then they're going to be renting. I don't know, but I find it very difficult to believe that the immigration rate and the level of income and wealth that's being immigrated into our country is not going to be able to afford these super cities. Because every time you look at the top 10 cities in Canada or across the world, Canada's 2 majors or 3 or 4 find themselves in the top 10, top 20, which makes them desirable, which makes them competitive with London, with Sydney, with New York, with LA, with Houston, with all of these beautiful cities across the planet that have square footage costs of $1,000, $2,000, $3,000, $4,000. So I'm going to get into the market update.
Yeah, I think it's a polarizing subject, much like everything else in our world right now, as to obviously your opinion is shaped based off your situation. So I think there is a larger conversation at play to understand what could be done. And we have conflicting factors, as you said, in terms of being an attractive place where people want to come to. And it's like, you can only do that for so long while not kind of breaking the wheel of real estate by continuing to pour people in, but not incentivizing the growth of your cities and the developments. So, and you said it 3 weeks ago, maybe 2 weeks ago, talking about how you think the importance placed on housing inventory, the housing situation in this country is going to be a major political point and discussion and rhetoric. 100%. And it is, right? You're seeing Pierre's, if you notice, Pierre has Poilievre, so conservative leader currently, going to be going head to head against Mr. Trudeau in our next election. He's taken off the glasses, I've noticed. Must have had some bad feedback from his publicists on wearing glasses all the time. So I see he's wearing contacts. I almost didn't recognize him, so it's definitely a different look. But I digress there. He has recently, in addition to kind of the carbon tax talk, which, I mean, PR-wise, not looking great with all the forest fires going on currently. Essentially, his people talking about carbon tax and talking about the fires. But also, the other rhetoric has been talking about housing affordability. And so you're seeing, like, this is going, I mean, the Liberals, and that's not a talking point that they want to necessarily go to right now. Are they working on it? For sure. It's going to be something that they want to discuss. I think they're meeting with, I think the Liberal leadership is meeting in Prince Edward Island either this week or next week, and basically having a large forum discussion with real estate experts in this country. Don't know what's going to come of that, but obviously it's a talking point for them internally, but not something that they're going to be running on in terms of their track record on this. But the Conservatives are going to be hammering that home and talking about how they're going to fix it. And so you're already starting to see them jumping on this wave of discussion that is amongst the economy and the population as a whole. And they're going to be trying to find a way to connect with voters and flip people over that are saying, I can't afford to get a home. My Canadian dream is gone. How can you fix this?
Yeah, where's my 80-year mortgage, please and thank you. So
That might be the solution.
I think what is becoming a very hot topic item is two things that we were actually seeing back in 2022 are reemerging. And that's why the NASDAQ sold off 8%, why you've seen the S&P 500 sell off 5%. The TSX is holding up a little bit better because of the banks are doing better, but also our commodity-based export country or economy.
The highs are higher, the lows are lower on the NASDAQ. Yeah.
Exactly, which is good. We're finding ourselves range bound, digesting, people taking profits. That's the rhetoric coming out from the major news outlets. However, why is this happening? And in my role, that is something important to be able to understand. And quite frankly, it's, again, the same culprit. It's the US dollar. And anybody who I'm reading right now, or I'm biased towards, who isn't on the technical side, I'm trying to read about the US dollar wrecking ball. And it is, to a large extent, the tool that the Fed's using. They're raising rates, which causes people to pile into US dollars, short duration, and it causes the rest of the world to go into a tizzy because it is the currency that all trade is processed on. As much as the BRICS are trying to start their own currency with the renminbi and move themselves away from the US dollar, the broader economy, global economy, is based on it. And when the US dollar becomes expensive, it becomes challenging. It causes growth stocks to be pummeled because the 10-year starts to spike, the 2-year starts to spike, and the cost of doing business goes up. And when you are importing and exporting in US dollars and the fluctuation of that dollar versus your currency, it really is a challenge. And right now it is growing because they continue to be, at least we have the Jackson Hole at the end of the week,
right,
which is like the main meeting from all of the Fed chairs from their specific regions, get together. They talk about policy on an ongoing or the next year or so. Obviously, they'll have meetings in between now and next Jackson Hole, but they'll talk about or try to project where they're going. It seems as though the new dynamic in Europe and Asia hasn't even stopped stimulating. There was a little bit of yield curve control in Japan, but quite frankly, they haven't been able to stop because their economy's actually kind of fallen off a cliff, for lack of a better word. And it's not growing at that 6-7% rate that they needed it to. And the US dollar, it being their biggest purchaser of goods, and then their dollar doing poorly, has caused a huge problem. They haven't reopened after COVID as well as North America and Europe has. And Europe has had a harder time moving from free or negative interest rate money to positive interest rate money. And their economy is also slowing down significantly. They just don't have the strength of consumerism that the United States and Canada more broadly has had. And that is causing them to be more dovish, while dovish being lowering or less hawkish than the Fed, which means they are raising rates or talking about how the rates are going to be higher for longer, whereas Europe hasn't been able to do that. You're seeing like 8 to 10% inflation in certain countries, the more important countries in Europe, and it's not abating the way in which it has in Canada and the United States, yet they're still unable to raise rates. And this is, again, causing growth stocks, equities to be repriced. It's causing investors to pile into US treasuries, and the broader market has sold off. So now what are we going to have to deal with going into the back half of this year, the last quarter of this year? And it's going to be this conversation around how long are we going to stay tight for in the United States? It seems as though high interest rates or higher cost of money has been okay for Americans, at least for now. And while this isn't for Canada, I want people to think about how the largest economy in the world is reacting to this. I believe that the Fed is well aware and it seems quite clear, at least based on Janet Yellen and the most recent rhetoric, that they are done. Now is the conversation about how long are they going to stay here for. And the longer they stay, the higher the 10-year goes. The higher the 10-year goes, the harder hit equities are going to be, especially longer duration equities. So think growth stocks, think NASDAQ, think any company trading above 20 times earnings. The S&P 500 is trading on next year's earnings, a multiple of 20 to 21. And if you assume that everything on the more expensive side, higher beta, is growth, those are going to struggle a little bit as we try to find our footing here. And
a new mean is established.
Yeah, exactly. So we'll see. We'll see. I've made mention a few times of things that are. I mean, there's a lot of overhead supply where the NASDAQ was, in terms of it's really run quite a bit. The S&P ran all the way to 4,600. It's retreating back to 43. There's been some digestion here that was earned. And I think after a 20% run, 25% run, or close to 35 in the NASDAQ, it makes sense. So we're going to have a lot of chop, I believe. The VIX has spiked a smidge, but quite frankly, I don't think we're in trouble until we see a 22 to 28 handle on the VIX. This is really just, again, us trying to tug or war our way into an understanding of where rates are going, because I think there's more question marks than there were 3 months ago. And we've gone from, we're expecting 2 rate cuts at the back half of 23 to maybe back half of 24. So that's a big change. I don't know.
With the reliance that, like, you talk about how globally, obviously, like what's going on in Japan, like other bigger markets, so in Europe, in Japan, Canada, whatever it might be, there is this, everyone's got their at least one eye, sometimes two, on what's going on in the US and the North American economy, I guess, as a whole. And so when there's this like reliance on global stability that is focused, not all your eggs in one basket, but obviously what's going on in one specific part of the world, I think that's also like taking a step back and thinking what we do could also, like, how does this affect the global economy as a whole as well? Whereas like a change in that Japan makes, obviously can make a blip and make a change in certain instances of the market. It's like, this is what the real mover is. So, you know, you said, talk about change of focus and change of rhetoric and change of assumptions or predictions in relation to rate cuts. I feel like for, I don't know, 18 months, it was just talked about, okay, well, we're continuing to look back and want to see the stats move to a point where we're happy with what that inflation number is. And then it's now like we're almost like stopped our sprint, and now we're taking a breath, we're getting some water, and they're now focusing on what's next to come and how best to play out the next 18 months. And thinking about how this is going to affect not just North America, but on a global sense as well. Because like you pointed out, the difference in how inflation has been handled and or controlled across the world, it hasn't been a blanket thing. And not everybody has been able to do the same thing that North America has or the US has specifically.
Money's relative, right? Like debt's relative to your competitors. I mean, we make assumptions based on past history of debt levels. But again, money needs to flow somewhere, right? And it doesn't just get destroyed unless it's truthfully debt is being reduced or being paid back. And we've kind of, as I think we've agreed upon here, we've assumed human beings don't do good or don't accept a reduction in standard of living over the course of their entire lives. Oftentimes our generation talks about, will we be better off than our parents? And that's just because of the human condition of always wanting better and more. I don't assume, or I don't think at least, our generation, our children, and then their children are going to be any different than us. I think we're going to require to have a better life moving forward. And in order to accomplish those things, you need to see growth, GDP expansion. You need to see more money changing hands, more and more and more, faster spending of dollars, which usually correlates well with improved standard of living. So with all that in mind, I don't think that we're going to go in reverse here. So unfortunately, dollars are flowing back to America because that's safety. Safety is where people go. And that then causes more challenges in Europe and Asia. So I find it a lot of my job ends up being asset allocation and where you're putting the money versus individual securities. You can often be more successful just picking the right countries and right parts of the world and avoiding the ones that are in tough. It will be really interesting to see where Asia goes. I think that Europe is inextricably attached to China and the cost of energy and whether or not it's going to be a warm or cold winter. They have less control than America does on its, and that tends to be a real challenge. So that's the reason why it trades at a lower multiple to earnings than America does, and it's the same reason why Asia does as well. And I don't see that changing at least this winter. So, Cam, moving on here, and you've added a few things that I found to be pretty interesting. You talked about, or you posted this tweet looking at this change in what Amazon's approaching or trying to do with their shipping. Now, most people, when they think about shipping, or at least in the past, have thought Canada Post, US Post, USPS, FedEx, UPS,
Tom Hanks,
Tom Hanks. Now, obviously, we have Amazon. I see more Amazon vans than I see FedEx vans. At least I do in Canada. And they've, at least for the last, call it 3 or 4 years, there's been a change in consumption. And Amazon has needed to show better profitability over the last 6 to 12 months because of interest rates going up, right? They needed to react to their share price going from, let's call it all-time highs in 2021, 2022, to interest rates going up, and then their stock getting hammered 65%, 70%. Jeff Bezos not being able to finance his yacht. Well, no, he was.
And taking a bit of a step back too.
100%.
Yep.
And then them having to kind of cut costs, figure out where they're going, and how do I put this? Reassess where they're spending money, right? And they've now, with their share price rebounding, with profitability and showing or cutting employees and margins getting a little bit better, and certain higher margin businesses growing quite quickly, they're able to spend in loss leading areas. And that would be shipping. And in 2020, 2021 on this podcast, when you were listening maybe more so than you were on it, I talked about how FedEx was in deep caca going up against Amazon. Amazon owns the platform in which people sell goods, or at least a large portion of that. They don't have the flexibility of not being profitable. They're publicly traded. They have a dividend. They have concerns. Amazon doesn't have those things. Yes, they are public, but they have other levers to pull. And now they've decided they're going to go back into shipping. And that is a big problem for FedEx.
So for those who might want to see the tweet and kind of launch off that for some more reading. So this is again from one of our favorite Twitter or X follows. Still don't know what the Reddit or how the...
I'm staying with Twitter for now.
Yeah. I see in a bunch of articles, it's like, as posted on X, formerly known as Twitter, just to be clear to people. So App Economy Insights posted this. So I'm just reading this, a couple of notes from their tweets. So initially tested pre-pandemic, the shipping service from Amazon was paused in 2020. Why? To manage the surge in online shopping on Amazon's platform during COVID-19. Amazon shipping is now relaunching. Sellers can ship Amazon orders or products sold elsewhere. The catch? Businesses must sell on Amazon in order to be eligible. So where's the best place to sell? Here. Oh, you can ship now too? Great. Here you go. It's all in one spot. Go figure. Amazon finding a way to vertically integrate. So or to additionally vertically integrate. So it says, what's special? Unlike fulfillment by Amazon, sellers use Amazon's delivery network without storing products in Amazon's warehouses. It only applies to domestic shipments. Through the pandemic, Amazon massively expanded its logistics to manage order influx. Post-pandemic, they had excess warehouse space, which they managed by subleasing and deferring new constructions. So obviously, this is, like, to your point, Amazon kind of now pausing, shifting, being agile, finding out where to focus their spend and their existing infrastructure and how they are able to either optimize the platform experience for their sellers and their buyers for that matter. And then also, what can we do to continue to make money hand over fist? So there is, I'm not sure if you want to dive into the actual, because obviously with App Economy Insights, they always provide great graphics for people to check out. I think there's a comparison for kind of the quarterly results in fiscal 23 between Amazon, UPS, and FedEx. I think maybe we'll just recommend for anyone interested to kind of go check that out. I think obviously this is, to your point, I think there's a lot more it's a lot more evident in terms of the eye test that we can see Amazon delivery trucks being out more. You're not seeing the third-party service being utilized that was previously done, again, out of necessity at the time during the pandemic when online orders just shot up and Amazon did not have the infrastructure in place to do their own deliveries. So I think we're starting to see this as a consumer. I think obviously there's a lot of talk about in certain cities it's already live, but just in terms of their ability to use the traditional delivery routes and then them also working on innovations and drones and other forms of delivery that are going to be available, I think, to the masses. Like here in Alberta, I know we have a fulfillment center around our airport area. Like who knows, maybe in the short term or the not too distant future, maybe you and I are getting some drone drop-offs at our front door for immediate orders that can be fulfilled. So I think this is again, it's just showing the beast that Amazon is and its ability to continue to reassess and find ways to, again, make money, but also just provide the best, either the platform experience for either their sellers or their buyers.
The way that I view this personally as like a investor, I think about Amazon as being, or what they're doing here is effectively ingraining themselves into our lives forever. In the same way that CN Rail and CP Rail built out distribution networks that can't be matched from a cost perspective, they lay out this massive outlay for infrastructure spend that governments can't match, that no company can possibly do. They do it with cheap money because their stock is so expensive. They do it because they have other ways to make money, whether it be AWS or their 1P through 3P services, advertising on their platforms. They do all of this by making money elsewhere to then expand into places that are going to kind of dig their claws deeper into us as consumers. And I view them, Amazon specifically, as being this behemoth that is now becoming as important to our lifestyle as in the past oil and gas as a commodity was. And it's thought of as like a tech stock, and it is to a certain extent. They're building microprocessors. They're the largest employer in America, with the exception of Walmart. I think it's incredibly diverse, but it's also planted in reality more than I think any other of the big tech companies. And if you were to ask me which one I think is going to be around when I'm 90 years old, I think that Amazon's the one. And it's probably mostly because of this focus specifically. I think Warren Buffett, if you ever read The Intelligent Investor, and if you're ever doing any sort of research into why he's made decisions in the past, you look at him being a large investor in insurance and in commodity-based items and in railways and trucking. And I think what he's effectively done there is he's bought these cash flowing machines that allow for him to take risk elsewhere. And for Amazon, I think and for Jeff Bezos more specifically, that's what's being done here. And it's just one of those forever names, at least, until we start living in the metaverse, I guess. But so long as I exist in reality, it feels as though they're going to be able to utilize this integration into our lives to then go into other areas, right? And that's now makes me think healthcare. If they can truly build out a great language model that is open source, like Facebook has, they are going to be able to add nursing and health and doctor help. There's going to be some interesting changes, and that's actually what I want to talk about next, Cam. I posted this in the chat, but it's K Health. Did you read about this at all? So it's an AI chatbot. It's an AI chatbot that helps doctors service or scale their advice.
Yeah.
And it's becoming very popular in the United States. One of my favorite follows on Twitter and remains Gavin Baker. Ever since he was on Invest Like the Best 3 or 4 years ago, I've been obsessed with him. I think the way that he thinks about investing is something that I align with, and his focus on video games and tech is always interesting. But he made and within his Atreides hedge fund, he's able to make private and public investments with their strategy, and he's made an investment in K Health. It's interesting to me because of the way that it's being integrated into some of the brick and mortar delivery of healthcare in the United States.
Yep.
I believe that, or at least it seems to me, that Amazon's going this direction as well. I could see this becoming more popular here in Canada, whereas obviously that'll likely be more controlled by our government, or at least the distribution of capital to those entrepreneurial healthcare providers will still be coming from our single source, which I actually think is beneficial. It is interesting to see that this is being successful, or it is successful. So in a roundabout way, as we moved away from shipping and why Amazon's doing what it's doing, I'm not saying this kills FedEx, because FedEx and UPS are going to be integral for like a Nike who doesn't want to go to Amazon.
Totally.
Or a Lululemon that doesn't want to go to Amazon. You're not going to see, unless they're secondhand products, those brands being sold and delivered via Amazon. As you had mentioned in your comments, you have to sell on Amazon to do that. And if you do that, you're effectively giving away your margin to them because you want the ease of distribution. That isn't likely. They're going to continue to deliver commodities. And then there's the business of e-commerce that I think is just, honestly, we're not even close to being saturated there. That where you have a brand that's important to maintain. And with brand comes higher margins. LVMH isn't selling on Amazon ever. No, nor is Gucci. Like you're not going to see that type of product sold there.
Yeah.
It's going to be that bifurcation. And that's where Shopify comes in. That's where FedEx, that's where UPS will find itself. But the UPS and FedEx delivery of commodity-based stuff, with the exception of super heavy things, is unlikely to be an acceleration, a revenue accelerator for them. So
it's. I guess it's like obviously they started seeing that head be reared back in 2020 or pre-pandemic. Then obviously there's been a cool down, but it's just going to be a new competitor, a new thing for FedEx and UPS. I'm assuming there wasn't a ton of business model changes for a lot of years for them, or at least in terms of them competing, it was against each other, and there wasn't a lot of huge threats in place. And now when you talk about the people who are selling on the Amazons or the small businesses who are making up that huge ecosystem that Amazon has, it's now, okay, well, instead of you having to click one more time to go then figure out the shipping side of things, you can just do it all in one place. And they have to figure out, obviously, ways in which they either have to, like from the UPS and the FedEx standpoint, is, who are our main targets in terms of customers, and how do we make this, how do we profit optimize the most from this standpoint? So it's either, maybe it's potentially just cutting off that side of what they were doing before. It's like, it's not worth our time to try and market ourselves to that side of the market. We need to focus on this. So I think it'll just be an interesting shakeup to see how much market share Amazon can continue to grab from this standpoint, and whether or not the platform users, people selling, actually find it a benefit, or to your point, is it, now we're taking care of shipping. How does this change from our pricing model? How can I sell properly?
Who got destroyed by this? Dropshippers.
Yeah.
People that were selling enormous margin hair products, teeth whitener, things that they were buying off Alibaba, repackaging and selling in America and the United States, or in North America. It was them who got disrupted by Amazon because they are. And
you wonder why maybe Amazon was thinking about it. They're probably like, man, people are buying a lot of stuff and then making money off of
these Ferrari driving people in Miami.
Yeah.
your margin's my opportunity.
Yeah.
They were obviously impacted the most, and now you have an advertising business growing at 50% year over year. Amazon's advertising. You have a 3P, 2P, 1P delivery and e-commerce business that's growing at a pretty fast pace. You have their AWS that's growing at a fast pace. I look at Amazon and I think the multiple's insane, 60 plus.
Yep.
But it just feels like something that if you're buying it, you're buying and betting on a continued expansion of online commerce and its integration into our lives, and their likely success in healthcare delivery and those sorts of things. I find it very difficult to bet against them when it comes to logistics. They're just the absolute best. And in that tweet, it talked about, I'm just going to bring it up quickly before we move on here. It talked about 24-hour delivery. And apparently, Q2 this year saw over half of Prime orders in the top 60 U.S. metros delivered within 24 hours. That is nuts, and they're set to double that going through the end of this year, or their intention is to, via Prime, their fastest Prime speed delivery option. That's crazy, and to think that that's now changed our way of our standard of living to the point where I expect delivery fast.
Yep.
5 days? What do you mean? That's insane, right? The only thing I allow that would be with luxury items. So that's where I think it's over to an extent.
Right.
You got Costco that's gone to scale in that, we call it bulk buying of food and goods and large items. You have Amazon in the middle, and it's destroying all the mom and pops that sold the commodity items. And then you have luxury or mid-luxury, mid-tier branded items that likely go the Shopify, FedEx, UPS route.
Yeah.
And that's the way it feels the internet's gone. And then you have another layer in there where you have AI, where it's going to then integrate into the customer service and the way in which we consume.
Yeah.
As the older generation dies and the spending habits of people with money are evolving because the generations are aging, you have a world that's in 20 years going to look drastically different. You're not going to have my grandparents around. My parents will now be the grandparents, and they've effectively changed their consumption habits. Life's different, man. It's weird, and Amazon likely could be, with the exception of maybe Apple, the biggest, maybe Facebook, I guess. They've changed our culture more than I think any other company. It's hard to say.
Yeah, I think just as a quick comment on going back to actually earlier in the podcast, you talked about standard of living and whether or not we think that our standard of living as our generations be better than our parents, and then the questions about our kids and how do we continue to make lives better, et cetera. I think and I might have said this before actually, but what the definition is of better standard of living back in the 90s or the 80s or the 70s when you're comparing to the generation before, it's a lot different. We're going through, I think we use the word kind of a revolution in our way of life right now, with kind of talking about kind of the AI generation or the AI revolution that we're currently going through. And a lot of the things you just talked about, even immediate shipping, our ability to potentially resource the expertise of doctors or psychologists or whatever it might be through an AI chatbot and through these language models. And I mean, the examples are infinite, but our access to information, our access to expertise has never been better. That's something that 100% is infinitely better than what we had in the prior generation. Now, from a housing standpoint, or the real question becomes, how do we then change, or how do people capitalize on this information superstation that we have now, or super highway that we have now, to access all these things and turn that into the exchange of money back and forth and the dollar for dollar and the increase of standard of living from a true financial dollars and cents standpoint. And I think we're going through that transition. I think we're going to be part of a historical standpoint that there's going to be a huge shift in how we all live our lives. And we're going through it currently. We've talked about how it's important to stay on top of all of these changes that are going on as a result of AI changes and how that's going to integrate into our work and personal lives. And I'm going to go ahead a little bit on a recommendation I had for a interview to watch or a podcast to listen to. So I've mentioned This Week in Startups before. Jason Calacanis interviews Mustafa Suleyman. I think it was last week. So he was one of the co-founders of DeepMind, and they were talking about how essentially how Google has been viewed or was viewed at one time during this kind of AI revolution as being quote unquote asleep at the wheel and letting these other companies, these other AI innovators kind of jump over them in terms of innovation or being first to market and having something out where people thought, well, Google, biggest search engine in the world, should have been expected to have been the leader in that industry. And he kind of goes on to talk about how Google was actually based off his takeaway, I guess, from spending a lot of time at Google. He's moved on now, but spending a lot of time there, was that they were essentially okay with not being first mover and kind of wanted to wait in the weeds and see how things developed, and are now kind of going full bore on the development, or they're figuring out where they're going to fit in the AI market with what they have.
They didn't need to be first here.
That's exactly what he said. We don't need to be first because we have the hammer essentially, and we have more infrastructure than we're working on a way stronger base than a lot of these other companies are. And so that was really interesting. And then he kind of goes on to talk about what he's doing now. And so he's involved in kind of a company that is developing like kind of a personal AI. And I just wanted you had mentioned talking about the K Health thing and the ability to access expertise there. He's working with one, which just one tidbit of it might not be the entire service, but essentially creating someone to, again, speak to and get expertise on your essentially psychologist type help, and getting help with getting through something in your personal life. So it's not just going to fact checking stuff. This is truly the development of this is to create someone to talk to have conversation with. And some of that's scary to me a little bit, but at the same time, you talk about the health benefits or the benefits that can come from being able to access expertise, and for people with all of this knowledge, either from a health perspective, psychologist perspective, finance perspective, whatever it might be, to be able to give that information to infinitely more people than what they're currently being able to serve. So again, this information highway that we're on, super highway that we're on, is just continuing to develop every single day. And so I found the discussion that he had with Jason really interesting, talking about his time with DeepMind, and then how after Google acquired them in 2014, and how their kind of applications were used in different Google products and the challenges that they found. And then also talking about his, obviously, since leaving Google, and talking about the AI generation and where that might go. So that was a really interesting listen, and kind of ties in with that K Health discussion that you had earlier. Yeah,
I actually met this guy in Edmonton.
Crazy.
In 2018, probably. I went to a round table speech that he had, and it was terrifying where he felt artificial intelligence was going to take us. He had more of a bearish take on humanity than I particularly
I would agree.
To digest.
Yeah.
I'm more of a techno optimist than this guy, and this guy's way smarter than me. So he's probably more likely right than I ever would be. But I tend to lean towards the Tim Urban view of where the world's likely going, where we have exponential increasing distribution of good things and bad things, where you have leverage on bad happening and leverage on good happening, and them both occurring, which obviously is terrifying given that we have access to nuclear weapons. But also there's so much beauty that could be attached to this leverage with regards to healthcare and living forever and standards of living and the improvements to distribution of food and poverty. So I don't know, choose your fighter, I guess, or you could just find yourself in the middle. But yeah, this week was a little bit, I have a lot of stuff was reading a lot of long form stuff personally. So I have a lot of great recommendations that I hope people go and check out in the newsletter. But kind of moving into what I'm reading, watching, and listening, I'm back on the finance kick going into what is a very busy season for me. I know that Netflix and HBO have started to drop their fall releases. Billions is out with a couple episodes, and Axe is back. You have Winning Time, which is phenomenal, like phenomenal. So that's, for those that don't know, the story of the LA Lakers and the bus ownership. It is such a well done series. Who's Adrian Grainer? Who was the coach for the Lakers?
Who was
during the early years of Magic?
Oh,
he was the assistant coach to then the head coach. He's really well dressed. What was his name?
Okay, I will Google it just because we're going to be live giving this example.
That was it is a fantastic show. There's 2 new episodes, so I recommend those both. Billions is kind of lame, but the last 2 episodes of Winning Time have been really good. The Invest Like the Best has been absolute flames. The All In podcast has been terrible. I have had enough of Chamath. He is getting absolutely dragged on Twitter right now, and he probably deserves it. Their thoughts and opinions on rich man north of Richmond.
Oh, yeah.
Was really tough to digest for me, listening to all these rich men north of Richmond talk about the how Americans are supposed to deal with the lack of wealth distribution. It's really rich coming from all these guys who talk about, I came from nothing. No, I came from nothing. No, I did better with nothing. It was really unbearable. The only one who was even remotely relatable was Friedberg, which is typical. But no humility coming from Chamath at all. So that's my recommendation, what I've been reading, watching.
Okay, so just to give I quickly Googled this because Joel can't seem to remember the coaches' names of the LA Lakers. So Jerry West would have been in the mid-70s, and then the next big coach was Pat Riley in the 80s. So Pat Riley's probably who you're talking about.
Yes, it is.
Originally, because they would have won 4 championships, 82, 85, 87, 88, with Magic at the helm from a point guard position, etc. So, yeah, that's a great show.
So 83, 84, did the Celtics win those 2 years?
Yeah, I think so. That would have been the Bird years. Yeah.
The guy who plays Larry Bird at the show is just hilarious. It's so good.
It's not to digress too much, but the NBA change in the 80s as a result of, again, it's usually dragged to teams and players specifically who revolutionize the game or revolutionize the product. And this sports series that they're doing obviously shows some of that, like the Showtime Lakers and Magic Johnson, kind of like Kareem Abdul-Jabbar was another legendary player, probably in a lot of people's top 5 list of all time. They went from him into Magic, obviously put together for a little bit, but like Magic Johnson and Larry Bird is arguably, they talk about their generation of basketball and having the Lakers and the Celtics, these two obviously massive cities, greatest rivalry, changing the game and changing the perspective on what the NBA is. I think
Price's way of
prior to that,
marketing too.
Yeah, 100%.
Focus on it
and personality and all this kind of stuff. It's actually really to get people's historical takes for people that obviously covered the game during that time, and then watching documentaries and stuff like that. It's really interesting to see because that's what kind of led. Like Michael Jordan always talks about how he wouldn't have been who he was in terms of how he carried himself and his off the court stuff without seeing Magic Johnson do what he did and Larry Bird do what he did, and then just their quest for greatness and being the best at their sport, and then also being I guess what do you call it, like ambassadors for the sport as well. Because I think the popularity in the United States grew a lot with those two guys, and then Michael took it international when they had the chance to do the Olympic Games, and then obviously just the greatness that he was, like how dominant of a player he was, how unique of a team he was on, etc. Like you never really saw anything like that.
Lucky with having megastars.
100%. But then the thing is that they changed their way in terms of how they marketed their game. They went from marketing the game of basketball to marketing certain teams and then certain players specifically. Totally. And so they've changed things a lot. Anyway, so Pat Riley is who you were trying to think of, I believe, for potentially Jerry West. My recommendations for the week, I already gave one, that Deep Mind interview. I thought it was really, really good. From an entertainment standpoint, I'm sure a lot of our listeners have seen Tiny Desk performances before on YouTube on NPR's channel. Post Malone's came out last week. I'm not sure if you've watched it.
No, it's on the list.
I'm not like a huge Post Malone fan, like kind of take it or leave it, but I always just find it interesting seeing like Mac Miller has a really popular one that's been on there, that's on Tiny Desk, and then kind of any rapper or anyone that's like kind of outside of what you would like. T-Pain has one. Like, is he the best singer in the world? No, but it's interesting hearing them acoustically go through their songs, and they're always like, I think 15 to 20 minutes long, these little productions. So quick, easy listen, watch kind of thing. But again, seeing just how talented all these guys really are. And like, you can tell like certain people have never done a Tiny Desk concert and you're like, I know why. Cause like you couldn't do this. Yeah. So it's just, I think it's great to go through that list. There's a lot of obviously high end or well-known people that go through that, but there's also lots of like kind of indie stars or people that you would never think of that have done them as well. So it's kind of always an interesting thing to watch. And then the other thing I started talking to you about, I didn't add to our notes for this week, but so Netflix has this Untold Sports Stories series. So I think they had like 4 or 5 out prior to this year, and then they've now released a few over the last couple of weeks. One was the Johnny Manziel story, which was very popular.
I watched that.
That was and then so they've just released the Swamp, which is about the Florida Gators and the Tim Tebow era. As I think it was 2005 when the coach, so Urban Meyer, very famous, well-known college coach, has I think delved into he had a very, very, very short stint in the NFL as a coach. It's always funny how college coaches have a very tough time making it in the NFL, or really popular college coaches and well-known ones don't tend to do very well when they jump to the NFL. I think because a lot of that probably has to do with who they're coaching. So like when you're like motivating your players, when you have ones that are there on a scholarship and need to do everything they can to get to the next stage versus people who are already at the next stage. I feel like that's got a lot to do with it. But anyways, Urban Meyer went in 2005, I think, kind of changed. Florida was in a rut for a long time. And so I was talking about their story and their kind of evolution to becoming a national power again from the college football standpoint and their college championships. And it just kind of goes through, I mean, there's a lot of guys from a lot of different backgrounds on those teams and talking about the different personalities and how they, again, became champions, but all the bumps along the way. So it's I've watched 1 episode so far. I've watched, or there's a total of 4. So I'll be interested to watch the end of that. But I always again, this would be very anecdotal, but I just love this behind the scenes stuff, even if it is kind of guarded. Obviously, like not all the information is obviously always going to be out there, but like I still watch the Last Dance production, like the Chicago Bulls, which is largely just the story of MJ. I watch that all the time still, just because I just love hearing about his mindset and how he took everything personally. Yeah, exactly. Yeah, the amount of memes that came out of it alone. But watching those storylines is always so interesting to me, and to see how I guess just the parallels that you can make between sports and life and success and failure and all that kind of stuff. So that's something that's on my watch list for the next couple of weeks to finish that.
Well, we got a week left of summer. So we're taking 2 weeks off.
Yeah. Enjoy Italy, my friend. We'll see you everyone in September.